Hello, I'm Kevin Ball from FXTrading Company, and I'd like to continue our weekly look at the US dollar. If we look at our first chart, which is a chart we looked at just last week on the 8th of October, it's a daily chart of the US dollar, and the labeling was added to RSI for our interpretation of the wave E of wave B. So this is just showing price action labeled to the momentum study, and as I mentioned, that is a chart we looked at just last week on the 8th. If we look at the second chart, which is again a chart we looked at on the 8th, this is the US dollar from a weekly perspective. Again, the price labeling has been added for a number of weeks regarding this chart to the momentum study of RSI. The previous chart just showed wave E of wave B, which is a daily chart. This chart shows the entire B wave lasting from September 2018 until now. So over a year's worth of data added to the RSI just at the bottom of the chart there. If we look at our third chart, this is a weekly chart of the US dollar, which has been captured today, which is the 17th. If we look at the red box on the left, that is the advance, that is the impulse wave, which lasted from the 16th of February 18 to the 17th of August 2018. The pink box, the small pink box in the middle, is the A wave, the first part of the correction for that red box, which is from the 17th of August to the 21st of September, again 2018. And then we've re-added our large blue box for our interpretation of the possible B wave high, and that has lasted from September 18 until the 4th of October, or the week ending the 4th of October, and you can see that date at the top right hand side of this chart just added there. The dashed line to the downside is our interpretation, and we've mentioned this before, of the missing C wave. You can see that labeled as a 1, 2, 3, 4, and 5. The blue line with 92.63 and then the magenta line at 91.66 are high probability targets for the C wave to terminate. The blue line is in fact a 50% retracement of the impulse wave contained in the red box on the left hand side, and the magenta line is a 61.8% retracement of that impulse wave, again contained in the red box on the left hand side. If we move to our fourth chart, this is a daily chart of the US dollar, again captured today on the 17th. If the B wave high is in and the current interpretation is correct, the dollar will start to decline in fives. Now, markets advance or decline in fives of one higher degree. What does that mean? It means that a bull market will be advancing in fives corrected by threes, and a bear market will be declining in fives corrected by threes. If the interpretation is correct of a C wave, the US dollar will start to decline in fives corrected by three wave advances. And you can see on this chart that I've added a small 5-wave decline from the potential B wave high, which I mentioned we have labeled as the 4th weekend in the 4th of October. And you can see that small 1, 2, 3, 4, and 5 to the downside. Our fifth and final chart, the inverse would be seen in the currency pair euro US dollar. So a decline in the dollar will result in a rally in euro US dollar, and again you can see we have the B wave low labeling with a question mark, and then the 1, 2, 3, 4, and 5 wave advance. Now, final point: if the dollar declined to the rates that are described in the previous chart, you would see euro dollar rally to an exchange rate of 1.20, some 1,000 pips away. So we'll continue to watch and update this currency pair and see if the decline continues.